10 Investment Strategies by Warren Buffett. Are you new to the business world? Are you looking for some guidance to help you succeed in your venture of investment? Having bought his first stock at the age of 11, Warren Buffett only took off to be one of the most successful and richest people in the world. After having written 11 books related to investment and management, chairman and CEO of Berkshire Hathaway, Warren Buffett has some tips for you. Never invest in a business you cannot understand. We all want to earn money and get into multiple businesses for more profits. However, it isn't safe to invest in businesses we have no knowledge about. If you are investing in a company that you don't know about, it is highly likely that you won't be able to forecast the success of the company in the long run. Warren Buffett advises people not to invest in businesses that they cannot understand. This is why he has avoided the technology sector for investment. Many mistakes can be avoided by staying in the circle of our own competence. Keep cash at hand. You must have heard that Warren Buffett has around $130 billion cash in hand. Have you ever wondered why? This is because he knows that when you have cash at hand, you can easily invest, acquire assets without any delay, and cope with any unprecedented losses immediately. He tells people that he has personally seen people suffer simply because they didn't have cash readily available. This is a very useful advice for personal finance, be it for an emergency fund or for investment. Make dividends your friend. Dividends are a portion of a company's earnings that shareholders are entitled to. Warren Buffett loves dividends. They are additional bonuses that one gets for investing in a good-rated company. Warren Buffett likes to buy and invest in companies that give dividends. Buffett says that the dividends paid by Coca-Cola will soon surpass the amount of money he paid for the stocks initially. Though they are expensive, you can also invest in dividend stocks as they provide a good value for the money you will invest. Price is what you pay, value is what you get. It is very important for one to know the difference between price and value of something. The price of a stock does not define the value of a company in the long term. During the Great Recession of 2008, Warren Buffett never sold his properties or farms. This is because he knew they had a good long-term prospect. Stock prices might fluctuate on a daily basis, but it would not mean that the company's cash flow would have a negative effect. Buy and hold. Buying and holding investment is something that Buffett truly follows and recommends his followers to. He has been holding his shares in companies for over 20 years, which shows how much he likes to buy and hold forever. This lays emphasis on one's faith in himself and his decision. Holding your position doesn't mean that if the company is constantly making losses, you still don't sell it off. Sell it off and buy other stocks when the time and price is right. Long-term investments. Only buy something that you would be perfectly happy to hold if the market shut down for 10 years, says Buffett. When you invest for the long term, it creates higher returns and increases in value over time. Warren believes that time is a friend of wonderful business. Fundamentals of a company can take years to be affected by the market price. Only the patient reaps all the rewards. Focus on the right news. Not everything you hear in the news is the right news for you. Many times, news and shows create a buzz just to prompt people to make impulsive decisions. Warren Buffett advises people not to listen to the so-called investment gurus, let alone act on them. As investors, we need to ask ourselves if a news item truly impacts our company's long-term earning power. Invest in yourself. The best investment you can make is in your own abilities. Anything you can do to develop your own abilities or business is likely to be more productive, says Buffett. Yes, this sounds too cliche, but it's true. You are most likely to make most money from your career rather than the stock market. When you invest in your abilities, you take the route of doing great things, and that applies to more than just investing. Low-cost index funds. The most sensible decision that you can make while investing your money is that you can opt for low-cost index funds. Despite his status as arguably the most prolific stock picker of all time, Warren Buffett advocates for passive index funds in his 2013 shareholder letter. Low-cost, passive indexing is a great strategy for investors to consider. No compromise on business quality. Over the course of 50 years, Buffett's investment philosophy has evolved, which has led to the conclusion that investors should prefer buying shares of high-quality companies with a promising long-term opportunity. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price, says Warren Buffett. It is preferable to invest in companies that give high and stable returns on investment. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel